What is going on, everybody? This is Matt Rinke, the founder of Illumination Wealth. I hope this finds you staying healthy and safe. Now, I wanted to put this series together because it's the beginning of the fourth quarter, and it's time to make sure that you're doing your year-end planning. Now, this is going to be a three-part series. The first part, today, we're going to talk about what tax planning opportunities are available if your business income has taken a major hit and declined significantly. What are the things that you need to be thinking about? We'll also talk about in the future video what to do if your income is relatively stable, and then in a follow-up video we'll talk about what tax planning opportunities arise if your income has risen significantly this year, because we've seen it in all different shapes and sizes when it comes to our clients' financial lives and business income. So here are some things to consider right now. One of those things is potentially converting pre-tax retirement money, IRA money, to Roth IRAs. If your income is going to be in a very low tax bracket or negative, you can be converting money and paying no taxes on it and getting it into a tax-free forever account. That's one thing you can be doing. You can also be thinking about taking the CARES Act related distributions from your IRA accounts or your 401k accounts. This allows you to take up to $100,000 penalty-free if you're before age 59 and a half, and defer the tax on that income over the next 3 years. And if there is low taxable income this year, this might be the year to take that distribution if you qualify. You may also want to not make your retirement plan contributions as you've done in the past because of the fact that you might be in this low tax bracket. So the converse to that is if you have a lot of excess liquidity and you do have the ability to contribute to retirement accounts, it would make sense to put money into Roth IRA, Roth 401k accounts as opposed to pre-tax accounts, because you're shielding income in low brackets, whereas down the road, it's likely you'll be pulling it out at higher brackets, which differs from this year. So something else to consider. Beyond that, if you have a business, I know many people think about making investments or purchases in their business at year end. Well, in this case, you might want to wait and defer those expenses into future years or into 2021, where there might be higher income in which you can write off that expense. And you might want to also think about pushing off depreciation that you might otherwise take on some of your investment properties, or how you deduct some of your equipment. If there's ways to eliminate that depreciation deduction now, perhaps it's smart to do. So you might want to be thinking about all of those things in your financial life. Now, you can also do what's called a qualified HSA funding distribution. This is a once-in-a-lifetime distribution that allows you to take money from your pre-tax IRA account and fund your health savings account with that money. So it's not you making the contribution from your paycheck per se, but it's taking money from your pre-tax account to put it in HSA, which is a triple tax-free account. So those are a few things to do. But in order to really plan this out strategically, you need to make sure that you have a tax projection completed. And so are you going to be at zero taxable income this year? So how much in terms of Roth conversions can you do? And another strategy that I failed to mention earlier is that you could be actually realizing capital gains this year. Capital gains harvesting while capital gains tax brackets are low, or perhaps you're in the 0% capital gains bracket. So maybe you have an investment property that you wanted to sell that has a little bit of a capital gain. You could sell that property in 2020 while your income's low and pay no capital gain on that, or realize gains inside of your brokerage account, an investment account that you may have accumulated over the years in very low to even zero tax brackets that we've seen for certain people. So make sure you know where you stand so you can take the appropriate actions over the next few months. So that's what we have for those of you that have seen their business and your income decline significantly in 2020. And if you have any questions about that, let us know. Happy to help strategize with you. Have a great rest of your year, and continue to stay healthy and live wealthy, and we'll be talking with you soon. Take care.